Here's 3 new considerations to take into account when you're evaluating whether an investment aligns with what's important to you and your values. And so the 3 biggest new areas that you can look into as you evaluate investments are, first and foremost, their environmental footprint. And while it might seem a little high level, consumers are starting to demand companies reduce their carbon footprint to look at doing things that would keep the earth going strong for many years to come. Additionally, how are companies treating their employees? What we found over time is that companies that treat their people well and have a good reputation in the community have a chance to do better over time. Happier employees are more productive employees, and happier communities are more supportive communities. Other things to look at as we become a more inclusive and diverse country, we want to make sure the companies we're investing in have that same perspective. And the third thing that you can look at as far as a new way to evaluate a company is, how is that company handling its books? Are they doing everything not just on the up and up, but are they continuing to be proactive in what they're reporting and sharing their directors' compensation and CEO compensation and how that's impacting the employees overall? So when you look at those 3 things, what's the environmental impact? What are companies doing as far as their communities and the people that work for them and their stakeholders? And then finally, how's a company managing their books and operating? You can find that you can sometimes get ahead of some risks on the investment side, but almost more importantly, you're staying on top of where consumer demand seems to be going.